Well, good morning, folks, and today's update. Let's just quickly have a look at the majors. But the main story today is the dollar, Japanese yen, and all things Japanese yen. We'll have a look at what's going on shortly. But let's have a look at the majors. Really, nothing has happened. We had a little drop in the euro. Not much going on, sort of a rally in the pound back up to that previous high. Aussie yen a little bit stronger, euro CAD a little bit weaker. We took some profit on that. Pound CAD a little stronger. So all pretty mixed up in the major currencies against the dollar and the CAD. The main story here really is, because we're not going to be talking much about these majors, we'll talk about the dollar yen more than anything else today, and a couple of the other things. But apart from that, just talking about currencies overall, the dollar index has shown a little bit of a revival of sorts. I can't really say this is very exciting, but yesterday's candle, well, one has to say it is a slightly higher high and it is a slightly higher low. And today we've followed through with that. When I say today, I mean from 5 a.m. my time, which is, I don't know, 3 a.m. London time. And that's when the news from Japan came out. So there was some economic indicators and also their Bank of Japan interest rate decision, which moved the markets as we thought it would, because we have been talking about that for a while, and that was one of our main trades which we had on. So overall, on all of this lot here, all we can say again is that the dollar index is still holding support, not very convincingly. Today we've moved a little higher with the news from Japan, but slipped back down again. And so the same thing, euro sort of dropped a bit, rallied back up again. Pound hasn't gone anywhere today apart from the rally from yesterday, and so on and so on. So really not very excited about the majors, or when I say the majors, I'm talking about the euro, the pound, the Australian dollar, etc., against either the dollar, the US dollar, or the Canadian dollar. So let's move along from that. Whether we'll get anything exciting from this today or not, I don't know. But I don't think we could really be saying we've got any great shakes going on, any great reversal. Yeah, some people are saying, well, what about the euro? Is this a reversal? I don't know. I mean, we've got, two dojis. We've got sort of a bearish, spiky, high candle there. We've got 4 tops in a row. Yeah, you could say that's a flat top. A quadruple top, I suppose, if you went into this on the hour chart. That's what it would look like. Let's just have a look. Yeah, well, more like a triple top, I suppose. So there could be some room for the euro to move down. We might have a go at selling it if we get a little bounce up into these moving averages. But that would be a small position and very tentative. And we'd want to get up to, say, 108.20 again, 108, 108.20, maybe even 108.40 or 50 before having a go on the euro, because we want to get as close to this top as possible to minimize the risk in a risky trade, because I'm not convinced this has formed a top just yet. I'm hoping it has, but I don't know. But all of that aside, I'm using, actually, by the way, I'm using the TradingView new app, which is really cool. So this is not on the browser. This is actually an app, which for lots of different reasons makes it really better than trying to access these charts through the browser. And I'm a little late to the party because this was changed, or this app was developed just around Christmas. But let's have a look at the dollar yen. Now, what I've done is I've just converted this to an hourly chart. But here's the move on dollar yen, and we're going to have a look at the news shortly. There's a big move up, 350 odd pips. We took all of that. We got in at the bottom. We got out the top, and we're looking to rebuy the dollar yen on any dips. And support is pretty clear on this one. So I've got this green line in here, and you can see it's support here on the daily chart, and it's support over here on the daily chart. But if we zoom in, so there we go, it's that green line. It's a pretty clear support level. If we break back and close back beneath that, then this currency is probably going to continue to move lower and reprobe the 126 levels, and then potentially even back down to 120. But with a bit of luck, we'll hold above this green line, that support line. And if we have a look on the hourly chart, it's also a Fibonacci retracement level. There's the green line that we want to hold above. And that's where we are at the moment. You can see we've rallied up to that top. That's where we took profit, literally at the top. I think 10 or 15 pips from the top. And we've now dipped down to that green line, which I had drawn in prior to this. You can see we touched the line, we're bouncing back up again. So we'd like to hold above there. My target is up here at the red line, and that's at 134.50. Call it 134.50, 135 if you take it to the top of this spike. But I've drawn it across this level here, just on average really, because it cuts through lows and highs. When you're drawing trend lines and horizontal lines, don't try and get the precise tops, the wicks, the shadows. Try and draw the line through. The bodies are more important for a start, but try and draw the line wherever you draw it, and the same applies to a trend line, where it touches the most possible points. So if you've got a trend line and you're missing out 5 to capture one top or bottom in a trend line, rather miss out the one, cut off the one, or miss it completely, and connect the most possible points. And the same goes for horizontal lines. So we've connected it there at 134.50. It's a nice half round number as well. We could move it up to 135, but I think that's great. So buying dips here, and we'll probably buy dips all week. Now, having said that on dollar yen, it's still risky because we're not too sure what the dollar index is going to do, as I pointed out on the previous chart. So we could just slip back down, and then we'll give up some of our profit. But that's okay. That's part of trading. But in order to mitigate that, we've talked about Aussie yen and this pattern on the Aussie yen for so long now. We've got this downward trend line that we've just spiked through. I'm not too worried about the spiking through it. We've done it a few times before. We've reached up to this 50-period moving average. This is a day chart on the Aussie yen. And it's good resistance, this green line, really good resistance. It forms part of this overall royal crown or crowning pattern, which hasn't fulfilled its job yet or completed its purpose. And the purpose of this beautiful crown pattern, which we've now actually made a lovely move into, actually to continue to build this right-hand part of the crown. The job of this whole pattern is to get this price to move down into around about the 80 level. We're at 90 now, 91. So we'd like to see this moving down into these levels to complete this pattern. And we've got a great opportunity to sell right now at this trend line. Yes, we've spiked through it a little bit, but at the green horizontal line. Horizontal lines are more important than trend lines. And the 50-day moving average. So we're short Australian dollar yen. We're long US dollar Japanese yen. One of them or both of them will work out. I suppose it's slightly hedged in a way, and that's why we call this hedge fund trading. We might profit on both of these. I think they both look good. I like this one good. Looks good for a long. This one looks good for a short, which means we'd like to see lots more dollar strength and Australian dollar weakness together with Japanese yen weakness. That's all possible to happen together. I'm going to ignore the rest of the yen crosses for now because these two are my favorite yen pairs, dollar yen, Aussie dollar yen, and that's all I'm going to say about those ones. And then let's go across to commodities. We're short on silver. Actually, we just closed that. I'm not convinced that we've got a top here in place. We took a profit on silver. Just closed that trade short from the top, near the top there somewhere. But I've got bigger fish to fry. I'm more interested in those yen pairs and a potential short on the euro. I want to see what happens with the dollar index today. Same thing with gold. Gold looks pretty similar to euro. I'm not convinced this is a top, so it might well be, but I'm not willing to risk that. Brent crude oil, I'm not busy trading this at the moment. We are at important resistance on Brent crude. If we can get up through there, we should see quite a nice move up into the, 95 range. We're at 86, 87, 88 now. So we could get up a little bit of a rally on oil. Natural gas, well, you know my position. Go and watch the video. I'll link this video to natural gas again at the end. Basically, I'm bullish on natural gas from these lows. Sugar, this is sugar for those who are interested. I'm short on sugar. I like this very much. Soybeans, I like this one too. If you're a commodities trader, there's a few opportunities going around at the moment. And there's my target zone to sell into on soya. We're not there yet, but a nice rally up into this zone here. There's a video on YouTube. Go and have a look for that as well on soya. That's an interesting one to trade. I've traded this quite a number of times over the last year. There have been excellent opportunities to buy and sell soya and sugar and natural gas and oil. I was selling oil when it was well over $100. Gold and silver, going to be great opportunities this year on those too. And then that's just another stock that I'm in. I'm not particularly excited about that one, but that's for another discussion. But actually, it's not that bad. I'm slightly excited about it. And then we've got Bitcoin, which has rallied up into this 21,400 level. I'm skeptical on Bitcoin. We've got this gap to fill beneath us for a start, so I'd like to see a move back down there. Whether we can hold up here or not, get up to this 200-day moving average, that's at 22,800. Quite possible. We could even get higher than that. We could get up to 25, 23, 24, 25,000 before any correction on Bitcoin. I don't know. It's very difficult. This was the Sam Bankman-Fried saga. We talked about this in yesterday's video. The FTX, SBF, weird setup. That whole thing was really, really strange. That's what happened there. Got down to 16,000. And we've held surprisingly well. Now, this rally here has gone premature to the stock market and premature to things like gold as well. So I don't know. To me, this looks like just a squeeze born out of frustration of November, December, and January, stuck in a range of no consequence whatsoever. So I'd be very, very wary of buying Bitcoin. You might want to have a go if we get to the bottom of this gap at around about 20,000. Good big round number, 20,000. Actually, 20,000 is acted as quite a good indicator of a divider really between the bullish and the bearish scenario on Bitcoin for a very long time. So going back to the middle of last year, 20,000 was the number, and for good reason, because it's also historically goes back to around about here in 2018. So 20,000 there, or just under, well, 19,000 was a major peak in 2019. So Bitcoin, yeah, if you look at it on the bigger scale, it looks great, but it's not really all that exciting. And we've got this big lurking 200-day moving average just above it. So if you're a Bitcoin trader, be very careful. I don't think I'd be buying this for sure. Might be selling it, but not buying it. And that's that. So the big story of the day really is, let's have a look at stocks. Forgot about that. There's two more things I need to look at. SPX. So we were talking about this a lot yesterday. I don't want to talk about NASDAQ or any of the other things on here. What was that? This is cotton. Sorry, I thought this was something else. I was thinking of this other. That's cotton. I've just got on there because I like having cotton on my chart. So just ignore that. I thought it was this other stock that I'm watching. This one, CF, but it's not. So NASDAQ just edging higher. No great shakes yesterday. Bit of a rest day. But we did have a higher high and a higher low. So there's no weakness in NASDAQ just yet. Above that 100-day moving average, holding above it. Actually holding above all of the moving averages at this time. There's the 50, the 20, the 100, and the 200. We're above them all, which is quite rare, really. The last time that happened was in December, and then, December, and then before that, Well, when was that? In May, March. So only twice in the last year have we been above all three moving averages, all four moving averages, and we are there on. I've got S&P there, and we are there on Nasdaq right now. So, oh, hang on, no, we're not. We've got the 200 well above us. Sorry, I'm getting confused between the two charts. Ignore all that nonsense. Forget Nasdaq because I'm not trading that at the moment. I'm more interested in S&P, SPX, SPY, whatever you want to call it, or whatever type of variation of this you're trading. I think this is interesting because we've got this level we stuck at yesterday. We've been stuck there for 3-4 days now. We're below this green trend line, rising trend line. We're below the downward purple long-term bearish trend line. We've edged above the moving averages. We're holding above all of them, including the 200, by the way. And we're stuck at the apex of that, all of that. Now, the interesting thing is this going to be an instance where we get a double bluff? Because everyone's seen these lines, everyone knows about them, everyone thinks they might break because they're so obvious. In the beginning of all of this, people were looking to sell at these lines, and then they became so obvious. They became so durable and so clear on the charts that everyone's now starting to think, well, we can't possibly hold below there. We're going to have to run those stops. We're going to have to shake out the weak hands. We're going to have to move up higher. And if the bear market does take control again, which we don't know if it will or not, but probably, but we don't know. If it does take control again, we're going to have to bust through all of this noise and clear out all of this traffic here, get a clear path higher, and bring in some fresh sellers so we can bust back down again. That's the conventional thinking now. A few weeks after everyone was thinking of selling there, now everyone's thinking of buying here. But this could be a double bluff, and we might see these levels actually hold, which would be hilarious, actually, if you think about it. And all of those waiting for this bust through, who are exiting, see people exiting short positions, long positions, undecided. There's been dramatic swings in the VIX, and there have been swings in the market sentiment, the fear and greed index, and all that sort of thing, and drops and spikes in volume, and generally just chaos. A lot of people just sitting on their hands and saying, I don't know what the hell's going on. We'll just wait and see. So that's where we are at the moment. Not great volumes, actually. So, and the fact that we don't have big volumes shows that people are waiting to see what's going to happen. So, S&P, we're short on this, but I'm not holding any great expectations that this is going to hold beneath here. The only expectation I can have for this is that it is a double bluff and that the market's going to fool everyone, including us, even though we're short. So there you go. That's that. Story of the day is the two yen pairs, US dollar yen, Australian dollar yen. We're long on one, short on the other. Take care.